It's Facebook's earnings. Will it be Darth Vader or will it be the Good Witch of the North? What's up, everybody? Welcome aboard. It's Bubba's Daily Update. And of course, we see very similar action, not quite the rally, but a rally based on Facebook's earnings, most likely. Right now, it is 2:30 Eastern time, and the markets are churning, but they are churning to the upper end. They've tried to break a couple of times. So the real question is will it be Darth Vader that shows up once again to destroy Facebook, or will it be the Good Witch of the North that explodes Facebook back to the upside? Based on the overall markets, we would expect it to be probably a mix in between. Markets we have now definitely turned into a downward trend and a correction territory. I think soon to be headed into bear market territory. As the markets churn, we can see all the activity and all the volatility, which only indicates that the top of these markets are in. As volatility continues to expand, it makes it even more certain. So what we're seeing here is a big whip around. Of course, the NASDAQ has been the whippiest today. As I'm speaking now, the NASDAQ is down 20 ticks in the futures. The Dow's up 155. The S&P is up 10, and the Russell's up. So we'll see how it changes out by the end of the day. I don't expect a major move one way or the other before the earnings. I'm assuming there'll be a lean towards the upside on the hope that there's going to be good news in Facebook. But we'll see. Again, what we're looking for now is we're looking for the opportunities to sell rallies. We are calling the top of the market, so you want to look to be a seller at resistance levels. That doesn't mean 2 or 3 ticks. That means a big rally, a rip your face off kind of rally like we had this morning was a selling opportunity. The straight off sell off early this morning might have been a buying opportunity. Again, you have to be willing to trade both sides of the market and take your profits when you can. So we look for probably, I would say the markets will close somewhere neutral between now and the close. I don't see an explosion up, and I certainly don't see them tanking them down either. I think it'll be somewhere in the middle, okay? We could come off a little bit in the Dow. We could hold up in here. We'll see. In the meantime, you see bonds are selling off, which is obviously pushing interest rates higher. The dollar remains strong. Oil has been weak and looks like it's headed lower. It looks like it's going to test our target in the next couple of days of 64. The grain markets were very weak today. Now, again, I can see why they were weak. There was not a lot of volume. And, of course, I think they're waiting for new money to come in from a sell-off in equity. So we'll see how that plays out and what that looks like. And the meats were, somewhat mixed. Feeders were a little bit weaker, fats were a little bit flat, and hogs were higher once again. So, again, right now we're in what we would say just a big jumbled mess of trying to figure out, how we're going to maneuver through these markets. I think you're seeing that in the equities, the big players are letting the dip buyers buy a little bit, and then they're slamming them over the head. And, of course, you can see how fast they take off to the downside when they start out. I think that Facebook's earnings will probably be okay. I'm sure they've written down a lot of stuff. I would not be surprised to see a pop in Facebook. But you can see that Amazon is now in bear market territory. Google is right behind it. The FAANG stocks are getting defanged. And I think that is one of the big issues and one of the problems that we can look for here. And the reason being that we're going to look for lower prices. Again, I think that you'll look to be a seller of all rallies. I don't see a reason that we're going to see a sudden turnaround. There are too many issues out there. And as the issues start to mount, okay, you then come up with consumer confidence at 18-year highs. What happened 18 years ago? The markets got clobbered. Again, we're still complacent at the retail level. And that is not a good sign to be at. The commercials are selling. They're selling everything. I think gold looks like it's getting ready to break out. It's been soft the last couple of days, holding that 1220 level. So look for a breakout in gold to the upside. I think when you look at the cryptocurrencies, again, they're holding very nicely and very steady. They're probably waiting for some more news to come out. But the key is they haven't got crushed during all this action. So what we're looking for here is very simple. It'll all come down to what Facebook's earnings are. If Facebook misses, look for the NASDAQ to get destroyed after the close, okay? If Facebook hits, we'll see how it acts. But even if they make their numbers, even if the stock rallies a bit, I don't think that this still bodes well. I think that still gives us the need and the want to sell a big rally because, again, I think right now, until proven otherwise, the markets are trending lower. We want to sell every rally that comes to resistance. So I'd be looking at 2,700 in the S&P as a spot to sell. I'd be looking at the 25,500 in the Dow as a spot to sell, maybe 25,000. So let's look and be prepared, be patient, and observe. Don't try to force the market. Don't try to force a trade. Be prepared and ready to go. Okay, we're starting our new hedging class today. If you'd like to get that webinar, you can email me at bub@bubbatrading.com. And of course, if you'd like to help us with our high school program, you can go to Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. Have a great day, everybody. Remember, this is about an hour and a half before the close. We'll see you back here tomorrow on Bubba's Daily Update. Have a great day.